All right, real quick, I thought I would really fast, not going to be a long video, talk about tight channels and when you get a breakout of a channel and why there's a pullback. Very often, I was going to, well, I was watching an Ask Al video, a recording from a question in the trading room a long time ago, and I'll post the link to it in the description. But and this is the day. It was over this day, or actually, it's over this day. It's over this past 2 days. And one thing I've noticed a lot that happens is a lot of times you get situations like this where I'm going to go ahead and turn the session break off, but you get a tight channel down and the open of the bar on the next day gaps down. And if you understand the context, it's reasonable to buy above here because you're at the bottom of the past 2 days, but it's such a tight channel down that the first reversal up is probably going to fail, which is why if you're buying in here, especially because of this tail, a lot of traders will get out here because it's at the moving average and waits by a pullback, and then you got one right here. So, and this actually happened on the next day as well. Here is the open of the 26th, and by the way, this is 5/25/11, 2011. So May the 25th and 26th of 2011, if you want to, and it's the ES or the E-mini futures contract. So if you want to look back on it on whatever platform. Anyways, the same thing happened sort of on this day on the 26th. You get a great looking first bar. I'm going to zoom in on the first bar so you can see it better. Great bar one, but you have to understand that it's not as great as it appears. This channel is so tight, at a minimum, the first reversal up is going to fail and we may get more downside. So, if you bought above it, in general, 20% chance when you buy above the first bar or you sell below the first bar that the higher the low will be set within the first bar of the day. So 20% chance that this low is the low of the day, 80% chance we fall below it. Good bar one, but let's see something real quick. Yeah, okay, so just as I thought. Sorry about that. A lot of bulls who bought above this bar entered at 71.25. They need 71.5. I'm sorry, 73.5 to exit with the 2-point scalp. So the reason I say 73.5 instead of 73.25 is I'm including 2 points and one extra tick to get out. So what I mean by that is if you bought above here, you entered at 71.25, and you can see right here, price went to 73.25. So it at this moment touched your profit taking limit order. Well, in general, if price has to go one tick above the fill unit, it did that on this bar. So you can tell a lot of traders scalped out. But more importantly, where I'm getting at is, be alert when you see this. This is a very tight channel down, and we may get something like this, which we did. Very often when you get a breakout, usually you get a measured move in one direction or the other. I've used over the past few days, I've used this example of last Monday right here, where usually, so what I mean by this is two scenarios. We either get, at this moment, we're going to get a measured move up or down most likely. So either a measured move up from this close to this open, from this open to this close projecting up, or from this close to this open projecting down. And the reason for that is if you buy this close, your stop's probably down here, and most traders want a minimum risk of 1-to-1. And if you look to the left, it's really not a great place to be buying. You're at the very top of the range, which is a losing strategy. It's also the best looking bull bars, rally that's gone on since the open of the day. So that's a lot of hours of, 40 bars, and it's, two pretty big legs up, and it just looks like trading range price action. So this could be a second leg trap, and we may have something like, kind of like that, where actually I like this more. So arguably the start of the breakout, it clearly became always in long here. You could say always in long here, but this may be still affecting. So it's still kind of in breakout mode. It's kind of like a triangle if you think about it. Clearly we broke above, at this moment, if you buy here, your stop's down here somewhere. So we got a measured move up. So anyways, it's not 60%. So if the bull's wanting to buy, wait to buy a pullback. And when you see this, it's telling you that the breakout's probably failing. So at a minimum, we're probably going to get down to here, because bears will sell this close, put a target down here, and use a stop way up here, measure move up. Well, sometimes when you get a move in, okay, we'll use this example. So sometimes when you get a breakout that fails, it goes the other way. And it, kind of like that. And I'm not going to, I'll discuss further later on, but just know, usually when you get a breakout, you get a 1-to-1. So why did we get a measured move down from this high to this low to this day, but not on this day? Well, one is look to the left. So if you sold this close saying it's top of the trading range, 60% chance we'll get down to here if I use a stop up here. Well, look to the left, look down here. It's forcing, if you sell this close, the math is better. I will say this. The math is a lot better to sell this close and put a target down here than to buy this close and put a target up here, because you're selling at the top. So you still have, in general, a 50-50 chance of a bear breakout. So it's not terrible math. So a lot of traders, what they'll do is they'll sell this close, and if it starts to stall, they'll get out right here. But the reason why it did not, it's lower probability to set a target down here, is it's below this range. On this day, it wasn't below this range. So anyways, I don't want to get too caught up in that. So let me see. Try and grab. There we go. Okay, so yeah, here's another day. So this was I remember this day pretty well. It's kind of an interesting day. This is the 12th of August, 2016. E-mini once again. Bar one, pretty decent. It's if you had to do anything, well, actually I wouldn't buy above it, but it's easier to buy above here, put your stop below, but you have to remember tight channel, so we may have to break this imaginary trend line and get some sort of double bottom. So when you see it just kind of rally like this, you have to be cautious and aware that we may form some sort of a bottom, or we may test back down. Let me see. Let me find another day real quick. Yeah, okay, this is sort of, it's similar. Actually, well, both these days are similar. I'll make it easier and turn on this. So let's start with this day. So we had a move up, been in a bull channel, kind of getting parabolic. So maybe 10 bars, 2 legs, and possibly reversal. We're at the prior day's high up here, so in the area of resistance, better look to sell. But if you sell here, this is tight, so you may need some sort of double top. Arguably, we got it right here, and then here. But that's kind of what I'm saying. It's not, if it's tight going up, it's probably not going to suddenly reverse. So if you're selling here, if you understand what's going on, you're going to say it's a weak high too and look to stay short. But you have to be aware that it may go more sideways, kind of like this day. Here we had a gap up, so it is a gap, it is a trend bar, and you have a sell signal, but same thing, pretty tight going up, so you may need some sort of retest back to the high or double top, but it's an okay swing short, but there's no problem in waiting for this. So here we had arguably a bull trend line break, a double top, and I think it's important price didn't get above this high. It's mine. It doesn't. It seems not that important, but it is. Arguably weak bears, what they'll do is they'll sell here, and then they'll see this breakout to put their stop one tick above, and that's a magnet. I think if you're short here, you have two choices. If you're short here, you put your stop up here, or you get out up here. Anything in the middle will get you hurt. So I hope that kind of makes sense. Comment below if you have any questions, and once again, I'll post that Ask Al clip that I was talking about in the comments or the description. Thanks.